Demographic trends play a significant role in shaping financial markets and investment opportunities. Here's how these trends impact financial markets. Age distribution. The age composition of a population influences consumer spending patterns, savings rates, and investment behavior. For instance, an aging population may shift towards more conservative investments and increase demand for retirement-focused financial products like annuities and healthcare services. Economic growth. Demographic changes can impact economic growth rates. Countries with a younger population often experience higher workforce participation, productivity, and consumer spending, driving economic expansion. Conversely, aging populations may experience slower economic growth due to reduced workforce participation and higher healthcare costs. Investment preferences. Different age groups have varying investment preferences and risk tolerances. Younger investors may favor growth-oriented assets like stocks and venture capital, seeking higher returns over the long term. Older investors tend to prioritize capital preservation and income generation, preferring bonds, dividend stocks, and stable assets. Savings and investments. Demographic shifts influence aggregate savings rates and investment flows. Countries with high savings rates among younger populations may experience robust capital accumulation, fostering domestic investment and economic development. Retirement savings trends impact demand for financial products such as mutual funds, pensions, and insurance. Sectoral investments. Demographic trends drive investment opportunities in specific sectors. For example, aging populations increase demand for healthcare, pharmaceuticals, senior housing, and leisure services. Conversely, younger populations may drive growth in technology, education, and consumer goods sectors. Housing market. Demographic changes affect housing market dynamics. Shifts in population size and age distribution influence demand for residential properties, rental housing, and retirement communities. Real estate developers and investors adjust strategies based on demographic trends to meet evolving housing needs. Globalization and migration. Demographic shifts, including migration patterns, impact labor markets, consumer markets, and investment opportunities globally. Immigration policies, labor force mobility, and cultural diversity influence economic growth, consumption patterns, and investment inflows in host countries. Long-term investments. Investors and financial institutions consider demographic projections when making long-term investment decisions. Forecasting population trends helps anticipate future demand for goods, services, and infrastructure investments, shaping portfolio strategies and asset allocation. Understanding the impact of demographic trends on financial markets is crucial for investors, businesses, policymakers, and financial advisors. By recognizing these trends and adapting investment strategies accordingly, stakeholders can capitalize on emerging opportunities, manage risks, and contribute to sustainable economic growth.